Tesla is one of the world's largest automotive groups by market capitalization, with a market value of over $840 billion at the time of this video. Ford's valuation is $60.9 billion, and General Motors is sitting at $56.09 billion. Which of these companies is likely to dominate the EV industry in the future? Hey guys, welcome back to Everything Tesla Stock. As is well known, Tesla has lost some of its share of the EV market, owing to the advent of new electric car companies. However, many may argue that it is still in control of the majority of these markets. Well, that may be true, but the actual dominance of Tesla depends on whether it can outperform every other automaker in the industry. In the past few years, Tesla's two major competitors, Ford and GM, have been investing heavily in manufacturing electric cars. And although Tesla has surpassed many of its market expectations, the highlight for most investors will be if Tesla actually earns much more money than these car makers. But does it really? Let's find out. Before we get into the details though, don't forget to like and subscribe and turn on the notification bell to keep up to date on everything going on with Tesla. So without further ado, let's get into it. According to Bloomberg NEF, researchers, the annual unit volumes for electric cars is going to continue to grow to 20.6 million in 2025. Considering the average price for an EV, that's about $1 trillion revenue for electric car makers to go after. In the past 10 years, Tesla has driven the EV revolution, and it is the leader in many important markets around the world. The car maker delivered 936,000 vehicles in 2021 and has been rapidly growing its production capability. On the other hand, Ford is a legacy automaker that still makes the majority of its sales from cars with internal combustion engines, that's ICEs. Ford plans to invest in EV operations with a $50 billion capital to ramp up EV production from now until the year 2026. The automaker also has a lineup of EVs like the Mustang Mach-E, the F-150 Lightning, in place to achieve this milestone. While General Motors reported solid year-end financial results in 2021 despite disruption in car production. None of these car makers, though, seem to be willing to give up on their pursuit to dominate the EV market. But there can be only one leading EV maker. Can that company really be Tesla? Keep watching to find out. In 2021, Tesla reported $53.8 billion in revenue and $6.5 billion in operating income. Most investors believe that Tesla will earn a large part of the expected annual EV sales, which will cause its annual revenue to increase. This is without mentioning Tesla's self-driving technology, solar energy, and battery businesses. But Tesla is not the only company making moves towards increasing EV sales. Ford aims to reach 600,000 in annual EV manufacturing capacity by next year, and 2 million by 2026. If this is successful, the car company could make up to $100 billion in EV sales in 2026. Although it is unclear whether Ford can produce as many vehicles in that time, it may have the opportunities to get there. Ford's market cap has surged over $54 billion in the past couple of months, with cash and equivalents of about $29 billion. However, this is nowhere close to Tesla's market cap of more than $800 billion, which is one of the largest in the world. For Ford to surpass Tesla in the future, it will need to have a market cap of at least $270 billion, and this may likely take years to accomplish. Likewise, Tesla's American-based competitor General Motors is on a path to sell only electric vehicles by 2035, with plans to invest $35 billion in developing EVs and self-driving cars by 2025. The company's sales totaled 578,639 vehicles in the second quarter of the year. Although its sales were down 15% from the last year, the car maker outperformed the market, causing its shares to rise despite the 21% fall in the total industry sales. Also, GM CEO Mary Barra has said that the company plans to outperform Tesla by selling the highest number of electric vehicles in the US by 2025, but this will take a lot to achieve. According to the CEO, GM's strategy is to deliver high-range electric cars at affordable prices and eventually beat Tesla in 2.5 years. For most people, this may seem ambitious and even possible, seeing that Tesla has increased the prices of its electric cars. But if we take a look at this, Tesla has high popularity in the EV market, and most people who buy electric cars are not just buying because they want an electric car, but because they want to own a Tesla. So it really will take a lot for Tesla to lose its US market to GM Motors or pretty much any other EV company. The EV market in general has been facing headwinds lately, especially due to supply chain issues which continue to affect the performance of all the major manufacturers. However, it is evident that Tesla is managing these challenges better. The automaker managed to keep up its production relatively flat sequentially in the second quarter of this year, and delivered 305,407 vehicles in this period. On the other hand, Ford's vehicle sales fell 17.1% year over year in the first quarter, and its top line dipped significantly following the drop in the total US vehicle sales during the last 2 years. Although total vehicle sales dropped, EV sales in the US continue to rise, and Tesla dominates a larger part of this market. For years, Tesla has dominated the EV market in the United States and is still doing so with a 68% market share. No doubt, its shares have decreased as more EVs hit the market, but the US EV market is still extremely dependent on Tesla's production and deliveries. This is not the first time that Tesla has managed a supply chain crisis better than its competitors. The car makers recorded more revenue even with lesser car delivery. The second quarter of 2022 saw Tesla produce over 258,000 vehicles and delivered 254,000 vehicles worldwide, and made a net income of $3.31 billion, while its rivals recouped less income even with a higher number of cars delivered. GM delivered 582,401 vehicles in the US alone and recorded a net profit of $2.93 billion, and Ford delivered 483,688 new vehicles to its US consumers and made a net loss of $3.1 billion. Needless to say, that Tesla is doing a lot better in terms of generating revenue and is making the largest profit margin in the industry, which is actually what is needed to stay in business. The car maker's revenue has been rising consistently for the past several quarters. Basically, no one else is making a net profit from their EVs, nowhere near as much as Tesla does. And not only is Tesla growing its revenue, it's also generating higher margins on its sales. In the last 3 quarters, Tesla recorded a higher profit margin than that of Ford and GM. Tesla is reporting a net profit of $2.3 billion for the second quarter of the year, outperforming GM, whose net profit was $1.7 billion. The car company also made 3 times more money than Ford, which reported a net profit of $667 million. It's also an established fact that Tesla will maintain its leading position in the EV sector, irrespective of the competition and supply chain challenges. The major challenge for EV companies is battery supply, and Tesla's made significant efforts to overcome this, partnering with the Japanese battery company Panasonic. Although companies like Ford are also investing heavily to grow EV production, they still have a long way to go before they hit a significant EV production target annually, and by then, Tesla will have likely strengthened its position further. However, even though Tesla has got incredible growth potential, the EV company will need to up its game to eventually beat these other car makers. Needless to say that Tesla has earned quite a lot of negative impression following its inability to meet deadlines for some of its project launches, like the Cybertruck. Tesla delayed the launch of its pickup truck multiple times. Despite several promised release dates, the vehicle has still yet to hit the market. Actions such as this can have a detrimental effect on Tesla's popularity and growth prospect. Likewise, its rival GM is outperforming market expectations. Most analysts expect a deadline in its earnings for the second quarter of this year, but the car maker had once again beaten analysts' forecasts. Despite the challenging quarter then, GM continued to battle supply chain issues, especially with its computer chips, and recorded a total of 95,000 vehicles produced at the end of June. Although its US sales were down 15%, it outperformed the overall market and took over sales from its Japanese rival Toyota. Seeing that sales from these car makers have been impressive in their markets, Tesla's definitely got a lot of work to do in keeping its leading position. Overall, Tesla is doing incredibly well in terms of sales, production, and revenue. Although most investors have found it difficult to wrap their heads around Tesla's gigantic valuation, which is expected considering its large market and products, it is still almost certain that the car company will continue to record positive results. So, it is fair to keep believing that Tesla stock can grow its massive valuation and grow into it, even way better than Ford and General Motors. What's your take on Tesla's market performance? Do you think either Ford or GM can outperform it in the future? Let us know down below. And if you want to know what Tesla's been up to these past few days, you can check out one of these two videos on your screen. See you there.